You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, that rockin' tune means it's time for a rockin' show. Yes, it's time for the option block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, similarly named network known as the Options Insider Radio Network. Where can you get said network? We're pretty much wherever you get your favorite programs. Chances are it's probably where you're listening to this now. A lot of you come through iTunes. A lot of you also come through third-party podcatchers like your Pocket Cast, your Downcast, particularly you guys on the Android side. A lot of you also like to use our app. And, of course, for those of you who like to have it in your ear holes instantly, you can tune in live every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern, via the old Mixlr's MIXLR. Grab it once, set it, and forget it. And you too can listen and enjoy live whenever we do, not just this program, but also Vol Views, Option Block the other day of the week, Volatility Views, TWIFO, all that good stuff. Some of the live shows we do, interviews during the week as well. All sorts of fun stuff waiting for you if you grab that link. You get some surprises during the week, which is always nice. And of course, however you listen, make sure you do what a lot of your friends do out there and your fellow listeners, which is hit us up with questions, comments, insights, pearls of wisdom, all that fun stuff. In fact, so many of you do that we decided, so many of you have been bugging us as well to say, hey, can you guys just do a bunch of questions someday, answer a bunch of questions? We're going to do that because it is kind of a truncated week here. Of course, the holidays have shortened the trading week. The Thanksgiving Day holiday here in the U.S. means no trading, a.k.a. no show on Thursday, and indeed no shows on Friday as well. So we thought we'd keep you guys happy, answer a whole boatload of your questions, a little bit of a holiday Q&A coming up here today. And to help me do just that, I am joined by my cohorts, my partners in crime. Let's start out in the hinterlands of Maine. So remote, I don't think they even celebrate Thanksgiving. They just have the old pagan Yule Tree Festival. Mr. Rock Lobster himself, Andrew Giovinazzi from OptionPit.com. Mr. G, welcome to the show. And have they heard of Maine yet up in your parts? Or have they heard of Thanksgiving yet up in your parts?
I could have sworn that Maine invented Thanksgiving. Didn't we have Thanksgiving here like 400 years ago or something like that?
It probably was more around Massachusetts area, but I don't think it got as far north as Maine yet.
That pesky.
Spoken by a Massachusetts native, of course.
Actually, I was more from Connecticut, so I have no love for Massachusetts. They are our sworn enemies, but I'm just kidding, all of our Massachusetts folks out there. But yeah, I do believe it was a little bit more in that region than perhaps Maine. But hey, you know, the exact geography of that first Thanksgiving, a bit of a mystery. That voice beaming in, not sure where he's beaming in from. He's kind of on the go most Mondays. Let's see if he is today. He is none other than Uncle Mike Tussaw from RCM Wealth Advisors. Uncle Mike, welcome back to the show, sir.
Always good to be here on a Monday. Excited about the upcoming holiday, but sad because we won't be having a show on Thursday.
Sad for no show love. So let's give the people a little extra today, a little bit of extra of what they crave so they won't feel as bad on Thursday. We'll make sure a best of is posted to the feed so you won't be wanting for content on Thursday, listeners. But just to give you guys a little extra love. Let's get into it today. Let's kick it off, though, the way we always do, with the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the trading block. And it seems like a lot of the markets already taking the week off, heading out. They're not waiting for the big Wednesday travel day. They're traveling, leaving now because everyone pretty much sitting on their hands, the people who were at their desks today to actually trade. Not much going on. Most of the major indices closing almost literally unched. The tech Nasdaq was pretty much literally unched. The S&P only slightly higher to the north, up nearly a whopping 3 handles, 2.75 to be precise, so about 0.1%. The Dow, the bit of the mover, the shaker today, which is odd, up about 0.3% of about 66 handles or so. Of course, all this green, as well as the impending malaise of a truncated holiday week, means a little bit of the steam, a little bit of the juice, a little bit of the vigor coming out of the ye old VIX. Down shy of the 11 handle again, back in the 10 handle. I'm liking where this is headed for my prediction of this week, off about 0.62 today. So again, a little bit of that sponge that got a little bit juicy over the past week, starting to wring some of that out this week. Let's start off in the land of where they don't celebrate, where they mistakenly claimed to be the birthplace of Thanksgiving, Maine. Mr. Rock Lobster, action-packed day out there, VIX coming off. Not much else really happening. What caught your eye? What was going on in the pit chat today? Were they kind of just discussing haircuts? What was going on?
They were discussing the happiness with a lot of the vol puts they thought were dead last week have all sprung to life. So there's happiness there for VXX, things like and VXX and VIX. We're starting to see the December contract lows for VIX again. It got to around like 12. The VIX December contract got to, what was it, 12.10 or 12.05, like 2.5 weeks ago was the low. And now I think it's almost back there again today as I look. So again, all the vol products are starting to get down, surprisingly, to that level. So that was a big subject in the pit chat. Yep, 12.10. So we have a contract, I think a near contract low for that, which is not good for the vol products. And you have kind of a more normal contango setting in. So it's with the little VIX cash smash. So you kind of like what I will just call the more normal part of the cycle. Actually, somebody made fun of me last week for calling VIX cash normal in one of my blogs. Wasn't really making fun of me. It's just the VIX cash doesn't mean anything unless it's in relation to really where the futures are trading. So that's, since all the products trade off the future and not the cash, then you have to put in that context. So, an 11 VIX looks different, or a 12 or 15 VIX all looks different relative to where all the futures are trading around them. So
they were making fun of you for saying that? That's what they were making fun of you for?
Yeah, they're making fun of you like an 11 VIX is normal. And then Mark threw something. He's like, well, the mode for VIX is 12. So then there was a couple more comments about I just getting whacked in the head by our 11th, or what is it, 7th grade statistics mean mode. And
what is a mean versus a mode, dude?
Exactly. But I think the most exciting strangeness going on, and I think you guys touched on it last week, was, this Bitcoin stuff being listed. So it'll be the subject of my blog tonight, but I guess the CME, the CBOE, and look at Square. Square was a $12 stock 6 months ago, I think. It's like $46 now. Like, why the heck at the beginning of the year Square was $15? It is $45 now. So why?
They said the magic word. All you gotta do is say one magic word: Bitcoin. And that's
I know.
It.
So the CBOE's up since I started talking about this. The CBOE's up like $3.50 since Friday. When I started looking at this, like, oh my gosh, these guys are going to list these contracts, and I don't. And to be honest, I saw a presentation on the cryptocurrencies at our option pit thing in the summer. I'm like, wow, well, there's something to it because there's just scarcity, right? And the guy was like, oh, this is going to go higher. And I think it was like Bitcoin was like $1,200 or something, or $1,500, and now it's $7,000 or $8,000. So I don't know what you get. I don't know what Bitcoin buys you. I know in our chat room we had guys mining those Bitcoins like 4 years ago or something.
So they're on their own private islands now.
Yeah. I don't know how many they got or did, but I know some guys are still long them. But where is all that going to go? I have no clue. But I'm looking at I'm looking at Square, I'm looking at CME, I'm looking at CBOE. I'm looking at Square volatility is extremely low for a stock that's literally up just $15 in 2 weeks. I think the CBOE vol is low. It's like 16 vol out to March. Full disclosure, I own some juice in there, so go ahead and buy tons of it, so I can get my own private island. So, we'll see where it goes. But, once they list these things, you probably dump everything the day they list. But there could be some fire under that smoke. That's all I'm saying. So those on kind of a slow week, just getting back to sort of a normal, healthy decay in the vol products, which makes everybody happy. And this potential Bitcoin phenomena getting into an exchange traded product, we'll see how all that spills out. But I'm seeing stocks going up for an awful lot, and I can't figure out the reasons why, so I'm just assuming it's that magic Bitcoin word.
Yeah, it's like the old days of the dot-com bubble. I was on the CBOE in the latter days of the dot-com frenzy, and you'd see stocks taking off, and you'd say, what does it do? And people would say, it doesn't matter, it's online. That was the refrain I heard all too often from people who were savvy professional traders. So now that refrain has become, doesn't matter, it's Bitcoin, right? Or it doesn't matter, it's crypto. And that's the new .com, just replaced before mentioned with crypto or Bitcoin or Litecoin or Ethereum or Ripple, or pick your poison within there, and you have pretty much the same effect. So yeah, for Square, relatively staid name, kind of a name. You plug in your little dongle, you accept credit cards, kind of a niche thing, but it worked. It was fine. It wasn't the most exciting thing on the planet, and all of a sudden, you're right, 3x, because they mentioned the B word. You're right, kind of crazy town. Speaking of these exchange-traded products, everyone's kind of waiting with bated breath for all these things to come out. We have an interesting listener poll. We asked you guys about that. The results kind of interesting. I'll break them down in a little bit. But it did seem for a while there like CBOE was kind of stealing a march on CME because they announced very early their products. In fact, we had their person involved with it. I'm blanking on the name right now. If you go check out our network, if you're interested in that, maybe we'll tweet out a link to that interview I had during the show so you guys can see it there. If you want more information on these contracts CBOE was talking about. But everyone was wondering, what are the other exchanges going to do? CBOE seemed to have it all to themselves, and then lo and behold, a month or two later, CME, out of kind of left field, it seems like, after having denied for a long time that they were going to actually play in that marketplace, announced their own on the Bitcoin reference rates. Now you have two dueling products, both futures. People kind of breaking down what's going into them. There was an issue, I know, with the CME one last week, one of the exchanges that goes into that reference rate. That reference rate is an aggregate of, I believe, 5 or 6 different exchanges, and they aggregate their prices over the course of an hour. They take 5-minute intervals over the course of an hour in London. I think it's around 4 p.m. London time. And then they aggregate those prices to create that Bitcoin reference rate. One of those exchanges was down, so obviously there's a problem with that. So there's people are weighing the pros and cons of that versus the Gemini thing. I think Russell from VolViews is actually going on a road show with the Winklevoss twins, maybe even this week or next week, to kind of to talk up all things Gemini and Bitcoin. So dueling views, dueling perspectives. I think either way, whichever camp you fall in, and we'll break down which camps you guys fall into in a little bit. It's good to have a listed venue behind this stuff in any capacity, because right now it kind of is the Wild West, and that's attractive to a lot of people, but also it means crazy volatility. It means you can't really hit a bid when you want to, and if you do, it's not really for the size you probably want to. So having a legitimate exit point, having actual market makers behind something like this, I think that would be a good thing. And it's also good for the business to have a product people seem to be genuinely interested in for the first time in a long time. We've been talking forever. The OIC conference was a big example of that a few months ago, about how the trend is not going in the right direction for the options business. The liquidity is concentrating in a smaller and smaller handful of names. It's shy of 20 now in the options business. That accounts for about half of all the volume. So you can count pretty much on all your fingers and toes, pretty much all the names out there that people actually trade in a given day. And that's not a good thing. So adding something new to the mix, even if it is something that is highly controversial or dubious, or call it what you will. Someone just tweeting in here while we're talking about it here. I think Krugman just came on Bloomberg and said, Bitcoin isn't money because tax collectors with guns don't accept it. So you can't pay your tax on Bitcoin. Interesting point. I never thought of it that way. But yeah, it kind of, this definitely engenders an interesting conversation, shall we say. So we'll get to more of that in a little bit. First, let's bring on Uncle Mike. Uncle Mike, I know you guys are really down with the crypto out there in St. Charles, but when you're not slinging some Bitcoin or some Litecoin, what was catching your eye in today's activity, sir?
Well, just to add to what you said about Bitcoin also, whenever you're investing in a product that doesn't have market makers or exchanges or regulations and things like that, you're really asking for trouble, in my opinion. And I think it's a good thing. I just want to echo the sentiments. I think it's a good thing that there is a place, if you want to have a position in Bitcoin, for better or for worse, that you can do it and you have the liquidity to do so. Because poor liquidity, even if it's a really good investment, a lot of times it doesn't end well for what you're looking to do. So I'm very happy that there's a place where people can go to do this. And the other thing, even in the Tri-Cities around my neck of the woods, there's I just kind of look online for things from time to time and just kind of thumbing through. But in a local event, they're looking to form a Bitcoin group in Geneva, Illinois, for Bitcoin investors only out here in the far west suburbs. So Bitcoin is definitely something that's grabbing some headlines, to say the least. In terms of today's marketplace, there really isn't a lot happening. For the most part, just as expected, with a triple income portfolio for RCM, we pretty much had a clean screen, meaning everything either got called out or got puts expired worthless. I think we had one stock in there, and that was JP Morgan, and that one was actually close to where we got it put to initially. So we're kind of happy we got put to us. So we had to sell some more puts today as our monthly round of put wheel trading. So that's always a fun thing to do. In terms of market movement, we really did not have that much of it with the S&P. We did have a little bit of an up day, but just the fact that we are in a holiday week, I wouldn't recommend putting too many new positions on if you can help it this week, just because of the fact that there's not a lot of movement. Now, if you're looking to put on like a 5-year position or something like that, well, it doesn't really matter. In my opinion, or that it won't really matter that much in 5 years. But if you're looking to put on, say, a 2-week position, maybe wait till next week before looking to do something along those lines. Pretty much everything that I was looking at was flat. Silver did come down a little bit today, but once again, we have relatively low volumes on everything. So I'm not reading too much into it right now, and just kind of getting all prepped up for that beloved holiday that may or may not have originated in Maine.
Calling lies on that. Stealing, first you guys out there in St. Charles stealing, the pickles and the water gardens, and then Mainers trying to steal Thanksgiving. What's next? Chicago maybe try to steal Thanksgiving, or all sorts of craziness. Before the craziness continues, let's get to some of your craziness. You guys have been bugging us for a long time. Can you do like a bunch of questions on the show? So I think, because it is a holiday week, because you guys asked so nicely, I think we'll do just that. It's time for a very rare, mega, super duper mail block Palooza.
It's time to take your seat on the all-star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, that music means it's time to get your questions in a lot earlier than we usually do on a Monday. We're going to devote a good chunk of time to you folks and what you got on your brain. We'll kick things off. We got a bunch of questions in here already, but we'll kick things off here while you guys maybe percolate some more yacht burning on your brain with the paying off our question to you guys last week. It's pretty much what we were just talking about. We asked you guys last week, hey, Bitcoin craziness, the war for Bitcoin derivatives is at a fever pitch. Both CME and CBOE have jumped into the fray now with very interesting, very different approaches on how to list derivatives on this thing. So fast forward a little bit. CME says it'll be approved in a couple of weeks. We'll have to wait and see on that one. CFTC, obviously a little bit of a smoother sailing process, a little bit easier than SEC, which is how CBOE has to go. So CBOE probably not till early next year. But that said, looking forward a few months, how do you guys think you'll be trading Bitcoin in 2018? The results are in. We gave you guys 4 choices. You want to go for the CME Bitcoin Reference Rate Futures. You want to go for the CBOE futures on that Gemini index over there. You want to stick with just your regular quote-unquote Bitcoin, so going to your usual venues that you traded on now. Or are you in the camp of, I still don't trust me some crypto? Uncle Mike, we'll start with you. What are you feeling in your bones, sir? What do you think our audience chose?
Well, I think the audience chose the CBOE product. And the reason is that we have a lot of audience members that have equity option trading capacity, and a lot of them don't have the futures and equity options in the same account in a lot of situations, especially if you have an IRA. Sometimes it can be cumbersome to get futures and futures options in IRA with the rest of what you're trading. So for convenience, since most of our listeners are equity option traders, I'm going to go with the CBOE. And for me personally, I'm staying away from the crypto at this point. And I know that you're extremely shocked to hear the second answer.
Uncle Mike, I thought you had all of your holdings in Litecoin, or I thought you had moved beyond Bitcoin into Litecoin. You're so bleeding edge out there. You're mortgaging the house, everything. I'm very sad to hear that's not the case, sir.
I knew you'd be shocked.
Let's move on to a place where I know he's slinging some crypto. That is the hinterlands of Maine, where I do believe they finally have power back, so that's a good thing. That said, Mr. Rock Lobster, after talking to your crazies in the old pit chats there and getting a sense of what they're into, what do you think our crazies here voted for this week?
That is a good one. I still think some of the crazies are staying out. Myself, I just like the exchange play. Like what the heck? Forget about the cryptocurrency and just see if there's a little bit for the exchanges. So, although that's not on our choices, of course. But if I was going on our choices, for me, I would say you go with the CBOE one because I think that will generate some interest. But I think everybody now they're going to say, I don't trust that crypto stuff. It's Freakyville. Plus, it's called crypto.
Yeah, that is a little spooky. But you're right. Our audience is buying when Uncle Mike is selling. 38% Uncle Mike saying they still don't trust that crypto. So there you go. They're keeping their money in their mattress, just like you. So find out what Uncle Mike's address is, and then have at that mattress. Lots of cash stuffed in there. All right. And number 2, actually, it was funny. For a while there, it was crypto don't trusting was winning, and then regular Bitcoin, and then CME was kind of doing well for a while there, and it seems like CBOE took umbrage at that because all of a sudden they started rallying some votes. And last minute, CBOE coming in number 2, scooping CBOE. 25% choosing the CBOE Gemini Futures, 18% for the CME, and right in the middle there, Goldilocks actually is sticking with regular Bitcoin, 19%. So our audience is kind of interestingly fragmented. They haven't really come down. A lot of that still, I mean, they posted the specs. We've talked about them, but still a lot of people want to wait to see these things in the wild. So I could kind of see why they're playing the wait and see game, because who knows? These things could be listed. They could be doing one lots, who knows? Also, the CME one, at least, I haven't looked at the CBOE one, but the CME one is pretty sizable. The contract, I believe, is pretty sizable, which is probably going to put it out of the reach. It's multiple Bitcoins, which these days we know is tens of thousands of dollars. So may have to have minis be launched on these things before we see some actual action on these. Speaking of which, our first up listener question. Surprise, surprise, what our first listener question is about. Are you guys ready for this? I don't think you could ever predict in a million years what this person is going to ask about. You guys ready? I'll take from your resounding silence that the answer is yes. All right.
Yeah.
Yes, they're asking about Bitcoin options. Nikbak wants to know, when do you think we'll have Bitcoin options? The answer is we don't know. Right now, the plan is for CME plans to have approval, which is pretty fast. They only announced less than a month ago, I believe. They already are talking about having approval by the second week of December. So that's pretty fast. Again, if you know the futures world, CFTC, smaller agency of the SEC, a little bit less red tape, a little bit easier to deal with. CME obviously has some knowledge of how to do that process over there at CFTC. So they're confident they could have it listed within the next couple of weeks. CBOE, like we said, a little bit more of a question. SEC plays by different rules of engagement. Maybe first quarter of 2018 is when we hope to see those listed. Now, again, those are the futures. The options, if it follows the usual trajectory for a lot of these products, they list the underlying first. So that's going to be the futures. And then if that does well, get some volume, we see the options following on the heels. With VIX back in the day, a decade or so ago, that was about a year. I think they'll probably try to accelerate that process. So hopefully maybe by I'm going to say maybe late Q2, early Q3 next year, we might see options on these things. Again, that's all predicated on a lot of things happening. That's all predicated on, the getting approval, which is a big deal. And then, of course, getting some volume in these things to necessitate some interest in the options. Then, of course, having market makers come in and stand behind these things. So a lot of dominoes have to fall in place for that to happen. But I'm going to conservatively say Q2, late Q2, early Q3. What do you guys think? I'm crazy, or are you guys on board with that?
I don't think you're crazy. I was thinking, when is CBOE actually listing the future? I thought that was
nobody
coming
knows. It
sooner.
hasn't been approved yet.
Oh, really? So it's just sitting there, and then when it gets approved, because it seems like they probably, knowing them, once they list it, they've been working on it for a while. So it would assume somewhere in the second quarter, I guess, somewhere like that.
Yes, my inside sources at CBOE tell me they've been working on this for well over a year. So they got it down. They're just waiting for that nebulous hammer of approval that could come any day or it could not come at all. So yeah, that's always the wrinkle in all those processes. But yeah, so far Nikbak, we don't know. We're just guessing like you are, but maybe we have a little bit more informed speculation here. I'm going to be hopeful. I'm going to say hopefully sometime late Q2. Probably not, but I'm going to be hopeful. Well, we can be optimistic here sometimes when we want to be. More exchange questions. Scott Sommer. It's almost like Scott Summers. Cyclops. I like that. So Cyclops here wants to know. Another question I would like to see. Another question. Did he ask? I don't see the other one if you sent it in here, Scott. Do you think that Nasdaq PHLX will have the most volume on a given trading day over CBOE as the leading medallion? He's referring, of course, to market share here, listeners. CBOE usually leads the pack now, especially now that they own BATS. So the CBOE BATS combined entity is kind of a juggernaut out there. Of course, SPX lights it up, so does VIX. So those two proprietary products really account for the lion's share of what CBOE does. That said, Nasdaq Philly, they have another floor-based entity, but they do things. They do a little bit different paper over there. For years they've put up a lot of what people have lamented about called the dividend trades, which tend to distort the volume numbers a little bit. Those have started to get reined in. OCC has made some changes over there to make it harder. It's not impossible, but made it harder to do dividend trades the way they used to be done over there. They're not seeing as much of those going up anymore. That's hurt some of Philly's volume. They also were one of the first, I'm pretty sure they still haven't repealed these. They were one of the first to implement fee caps and the last to really take them away. Fee caps, of course, means if it's going to cost you the same to do 10,000 as it does a million, so you might as well do a million. So that's why we see some distorted numbers come out of Philly some days. So is it possible? Sure, if they still get some crazy div trade that goes up that does a million contracts, they could easily take, that, and they probably have. I haven't looked at the numbers recently. They probably have, those are kind of big, kind of distortive trades. Outside of that, I think CBOE, with the actual volume that we say kind of indicates legitimate economic intent and activity, I think it's going to be hard for them to, unseat the king beasts of SPX and VIX over there. I don't know, Mr. Rock Lobster, Uncle Mike, any thoughts on this one?
No, I think the SPX is going to be that's the king beast. They've suffered through many lawsuits through the years. They're still on top, and king beasts, 800-pound gorillas, they're tough to beat.
It is to beat the under 800-pound gorilla. So, and the reality though is the CBOE is where a lot of the innovation comes out of. I mean,
they make a lot of new flavors of VIX. Unfortunately, most of them haven't seemed to stick. I like the single names. I liked a bunch of other things. A lot of them haven't really seemed to resonate the way the big mothership VIX has done. Right. But if they can get one of those to stick,
the weeklies are coming along.
The weeklies. Yeah, the weeklies. CBOE certainly was the engine behind those, so you can give them a lot of credit for that. And weeklies have taken off. So yeah, I guess you can kind of lay weeklies a little bit at their doorstep. So there are some. Yeah, they're trying new stuff. I give them credit for that. I would like to see a lot more. I mean, things like you think would be no-brainers, like the oil VIX and the gold VIX. They remember our infamous discussion to this day, Mark Rockloff, one of my favorite conversations I had with you on that, where you insisted to me that there was no GVZ, nothing traded on it because it was just that's how little it does. I mean, think about that. Gold and the VIX, those two things should resonate, right? And yet that thing hardly ever moves, but it hardly ever trades. So it's crazy. Things that you think would be home runs don't take off for whatever reason. So yeah, it's a little bit harder to make these things. Of course, you have to deal with the approval process, as you mentioned before. So hopefully with the momentum behind these Bitcoin things, they'll at least get a little bit of action. We could talk about them some more. I guarantee you we probably will. Judging by your input and your feedback, you guys want to know about all things Bitcoin. So we shall try to keep you duly informed. All right. MarkLitwin wants to know, Thank you for your time and explanations. Well, you're welcome. I appreciate. Exclamation point. I like that. Appreciate, exclamation point. I was thinking of using options leverage with a limited risk of losing a premium. This is all over the place. But by buying an option long enough to cover a span between ERs, I think he means earnings, and the one which is already in the money with a delta of 1 and selling that option just before the next earnings. Would you comment on that idea, please? Let me read that again because let's see what the heck he's talking about. All right. I was thinking of using options leverage with a limited risk of losing a premium by buying an option long enough to cover a span between earnings and the one which is already in the money. So I think he's talking about buying maybe like a quarterly in the money, sounds like a call, he doesn't say really, which is already, so a delta of 1, so he's talking deep in the money calls, quarterly probably, because he wants to cover the span between earnings, and then selling that option just before the next earnings announcement. So what you're talking about there, when you're talking about a little bit longer term, deep in the money, you're kind of talking about doing a stock replacement. So if you have I'm assuming you mean probably buying calls. You don't really specify, so you probably want to do a directional play on this. If you have a good bullish outlook, you're gonna hold this for the entire quarter. So if you have a good outlook in that direction in the underlying, and you want to do capital efficiency, go for it. I don't know if just doing that. I mean, one thing you are insulating yourself. We talk about that vol crush after earnings. One thing you're insulating yourself against is there's not a lot of, it depends how deep in the money. If you go delta of 1, you could have a lot of intrinsic value on that option. That's not going to decay. That's a nice thing. Downside is you got to pay for that. That's expensive. So I don't know. This is I don't know. What do you guys think of, at least how I'm reading this? He wants to buy a quarterly deep in the money 1 delta option and then sell it right before the earnings announcement. So I guess a little bit of a directional spec between earnings.
I think
it's a good way. Oh, go ahead, Andrew.
No. This is kind of what Ofer does something similar to this, doesn't he? With his CML.
Does he do 1 delta options?
He doesn't do a delta 1 option, but he does. It's a into the earnings bull market trade. I mean, we're in a bull market, options level bull market. You know that, so I think is that the worst idea I've heard? No. I don't know if there's probably, instead of buying delta 1 option, maybe you could buy something a little less, but I guess he doesn't want, but I mean, it's a bullish trade. But also sometimes that delta 1 can become a delta 0 if we crack up between the earnings cycle. So I would say just be careful about that. But it's certainly, I have seen plays very similar to that, gaming the earnings cycle, and it has been a killer strategy. It's been a killer play for at least this year, because technology earning stocks have gone, through the moon. So
yeah, buying of any delta 1 options right now and just riding
is working.
You're killing it. You're crushing. You're a genius. Uncle Mike, what say you to this? Is this the fundamental portion of the strategic night here?
Not exactly. It's not. I agree with Andrew. It's not a bad strategy. I think that it would be something to look at as a beginner option trader. Oftentimes, I've even said, if you're really concerned with, when I go through the 6 factors of option pricing, if you're really concerned with time decay and volatility, if you buy a 1 delta option, then those don't apply to you. The disadvantage that I see of buying something deep in the money is oftentimes liquidity is not there, meaning the bid-ask spread is likely going to be pretty wide at that level. So I typically tend to want to do let's say I wanted to get the 100 deltas in the option, I would likely either buy let's say I want 200 deltas. And instead of buying 2 1 delta options, maybe I would buy 3 65 delta options to kind of come close to it, and then manage them in such a way to where maybe I sell some premium against them at some point, or set something up along those lines to where what you're trying to do ultimately with a 1 delta option is have the 100 deltas, and you're trying to not have volatility or time decay hurt you. I think there's other ways to do it, not necessarily better ways, but the other way of thinking of it would be to set up 100 deltas in another way by doing some type of a spread strategy. And you might need 2 contracts instead of 1, but take a look to see what kind of risk you have in doing something like that as well, because that could be a viable alternative.
Yeah, I'd like to see some sort of outlay mitigation, just naked buying really deep in the money options. That's an expensive road to hoe. So maybe you want to think about maybe some of the rock lobsters doing stuff there to get your juice for cheaper. And you're not going to get an in the money option for free unless you go super crazy. But a little bit cheaper probably would be nice. Maybe a simple vertical start there. Maybe you do some other things. Maybe you finance that with some farther money. All kinds of fun things you could do. But yeah, it's not terrible. It's different. I give it points for different. No one's asked that particular question before. Let's see. Albert Deckel says he got 2 questions. Well, I don't know. Usually I only allow 1, but since we're in a holiday charitable giving spirit, we'll allow 2. While I understand how to convert a quote delta into meaning, I really don't understand what consists of high versus low, gamma, theta, or vega. For example, when theta is so high that it makes the purchase of a contract dubious, or vega is so high that it makes the purchase of an out-of-the-money contract desirable. Also, this is, I guess, the second question. Also, if I were to write an in-the-money put, what combination of delta, gamma, theta, or vega am I looking for? Thanks so much, Al. Wow, everyone's got in the money on the brain today. That's interesting. We don't get a lot of questions about in the money. This guy wants to write in the money puts. The other guy wants to buy deep in the money calls. Interesting. Well, what we talked about before, let's go backwards on this one. What we talked about before kind of applies to you as well with the last question. You're trading in the money puts, so you're going to have a lot more meat on that bone than an out of the money put. So all the stuff we were saying, if you're selling in the money puts, a lot of that stuff you want to get, the decay is not going to decay because you're in the money. The extrinsic value can't go anywhere. So if you're selling it for that reason, maybe you want to focus a little bit more out of the money, because that stuff's not going to decay. But the out of the money stuff can decay all the way to 0, or perhaps a little bit closer to 0, which is what you want when you're selling those options. So if you're looking just to harvest stuff, maybe in the money isn't the way to go. In the money also, you're going to have a higher probability of that stock getting put to you. So if you want the stock, if that's what you're going for, then by all means, that's the way to go. But that's something just keep in mind. And obviously, if you're selling in the money, your delta is going to be higher than 50. Your gamma, depending, you don't say where you like to play here. Obviously, when we talk about weeklies a lot on the show. When you're playing in the weeklies, your things like your gamma and your theta are going to be exploding to the moon. So that's something. Whereas if you're talking like our other friend was talking quarterlies, different ballgame. Not so gamma theta heavy out there. So kind of maybe a little bit more detail would have helped us a little more to kind of walk you through what you're talking about, because you're right, it's confusing because it's a subjective thing. It depends on the strategy, it depends on what product you're trading, which time frame within that product you're actually trading. All these things are going to change the subjective viewpoint of your delta or your not maybe not your delta, but your theta, your gamma, all the other stuff like that to make it what's high and what's low. So maybe let's just choose a period, I suppose. Let's just say maybe we'll choose a couple. We'll say we're trading weeklies versus monthlies, and maybe we'll give you some strategies we like too, because we're nice, we're kind that way. It's a good week. Maybe Uncle Mike, we'll start with you. A lot of questions here to unpack from Al. What do you got to say here? He wants to sell in the money puts, and he's kind of confused on kind of this, which is understandable, the subjective nature of these Greeks and what they kind of mean for him. What's high, what's low?
Got it. First thing, Al, would be with selling in the money puts. Just to clarify, on the put side of it, that means that the strike price is higher than the underlying. So for example, if your stock that you're looking to trade is at $50 a share, an in the money put would be a $55 put. A $45 put would be an out of the money put. Just remember, puts are kind of upside down with how they work as compared to calls with the terminology of it.
Yeah, I got a feeling. I think he meant out of the money with that too. I was kind of thinking the same thing. He probably wrote in the money, but I was thinking he meant out the money. So I was looking at it in that way. But you got to go with what he wrote, right?
You do. So with that, whatever way you go, Greeks are a gauge, meaning that there's no right or wrong saying, oh, this is a good delta or this is a bad delta. All Greeks are a gauge, meaning that just like on your car, you have your temperature gauge, your oil gauge, your gas gauge. Greeks kind of work the same way, just for options. And it's just a way of describing what things are and how they work. So in terms of what would be dubious, it doesn't necessarily mean good or bad, because you've even heard Mark Longo on the show. Everyone's a degenerate and dubious with whether you're a premium seller or a premium buyer.
Can't trust anybody.
Of course. Absolutely. So in terms of how they would work, in terms of where theta is dubious or good or bad, I wouldn't necessarily look to see the theta number. If I'm looking to sell premium, I know that I want to get an average of 1% per month if I am 5% out of the money or something like that. I have my rules of things with which I'll look for. I can talk about those on a strategy block another day, but I have my general rules like that. I don't even look at the theta measurement. What theta just measures is how much time decay you're losing per day. Theta can change at the drop of a hat. If Vega changes, Vega can change theta. So let's say all of a sudden that there's a huge implied volatility rush, meaning all sorts of billions and billions of people want to buy this 50 put option or whatever. And there's no movement in the underlying, just everybody and their uncle wants to buy this put option. There's just a huge surge in buyers of this specific put option. Well, in a vacuum, meaning if no other factors were involved, then that would raise the implied volatility of that put, meaning there's more juice on that put. There's more juice on that put. That means that there's going to be more of a risk to buying it because there's going to be greater time decay every day. So in terms of how to look at the Greeks for theta, what I like to look at is just seeing what my general rules are and how it would work. For Vega, that's kind of one to where you can go entire classes on that, and Andrew can tell you more about that in terms of how Vega works. But volatility is the great mystery factor of all option trading, meaning it can change a lot of things with an option in a lot of ways. What is a good number for Vega and how it works? Once again, it kind of depends on what you're looking for. If you feel that, holy cow, I'm looking at the cost of buying this call option, that's way too much money for me to pay for this call option. Well, maybe you want to buy a spread. The same way with either selling in the money or out of the money puts for that matter. If you're looking at it and thinking, holy cow, I'm looking to sell this $50 put on a $55 stock for a nickel for 4 months, probably not really worth it to you. Once again, with Vega, it's kind of a similar answer in that, if from the standpoint of selling puts, in that, what are you looking for? Can you get this much premium for this time frame, regardless of what the Vega and the theta say? Then do it or don't do it. Now, if it's too high, that's when you got to kind of raise an eyebrow and say, whoa, how come on this company I can get a 12% rate of return by selling put 14% out of the money for just 1 week? Well, most likely it's a pharmaceutical company of some sort that's having a drug announcement, but have an understanding as to why that is. Vega can be high, Vega can be low, but take a look deeper and kind of see why that would work and how that would work. So in regard to Gamma, that's kind of one where there's no necessarily good or bad Gamma, but just have an understanding of how it affects things in terms of whether the option is in the money, at the money, or out of the money. Option strike prices stay the same unless there's a stock split or something, but option strike prices stay the same for the life of the contract, but they can change from going in the money, at the money, or out of the money, and that's how Gamma changes. And as Gamma changes, Delta changes, and as Delta changes, the amount of movement in the underlying changes. Once again, when looking at this, I like to have a set amount of premium that I'm looking for in selling a put, whether it's in the money or out of the money, and determine whether it makes sense. If it's way more than what I'm looking for, then I like to think, well, why is this the case? And I do more research, and if there's reason to where, whoa, we got a drug announcement coming out next week, this is not something that I want to be part of based on this volatility. Or, you know what, even if this drug announcement's really bad, I got so much premium, I'll be laughing all the way to the bank. Either way, I'm happy with this. So I would say take a step back, kind of look at everything from the parameters that I gave, and then as you do this more frequently, then maybe you can look for more Delta, Gamma, Theta, or Vega, because I've been at this 15 years, and the way that I look for things in selling puts, I don't even look at what those specific numbers are. I just look for my own rules and how my sentiment on the stock.
Uncle Mike laid it out for you right there. Vega 36. Above it, you sell. Below it, you buy. That's it. You laid it out. Very, very simple. Thank you for that.
What else do you need to know?
What else do you need to know? 36. The magic. Actually, it's supposed to be 42. Isn't that the answer to all things in the universe? Mr. Rock Lobster, he's chomping at the bit. You should see the umbrage he's sending me in our little chat here, our host chat listeners. He's saying, how come you didn't ask me this question? So I will allow him to this question. We probably literally could discuss it the rest of the show. That said, Mr. Rock Lobster, what say you on this very subjective topic?
I think we could fill books with this. As a matter of fact, I think people have filled books with this very
topic. Probably
topic.
are one or two on the shelves right now pertaining to this very question.
I think Mark's actually even tried his book number 2 will address these topics. So what I would say is Mike did a great job. Yeah, all of the Greeks are indicators, and then all the smarty pantses will say, well, there's also the secondary Greeks and tertiary Greeks and all stuff. So who cares about that? What matters is what you really have to think, and what Mike alluded to, is what are the inputs that drive the Greeks, right? Gamma is strike. Vega is implied, volatility, whatever the forward vol is going to be. Underlying price, what's going to happen with that? What I do when we teach is I think you have to teach, if you want to trade options or buy or sell them, you have to have a sense of the inputs first, where you think they might go before you even create the trade. So when Mike says, oh, I've got I'm looking for a certain way, a put that I want to sell because I have an agenda. Well, he has an agenda for strike. He has an agenda for underlying price. There's a certain premium he wants to get, so the implied volatility has to be a certain level. He is going through the input catalog of the model, and then the Greek will just basically tell him how fast or slow the option's going to move when everything else starts moving. So if you want to trade options, you have to have a sense of the inputs first. So in general, that would be strike, time to expiration, volatility, underlying price, and there's cost of carry. But unless there's a divvy or something, it doesn't matter a whole lot anymore. So it still matters, but just not unless it's really a dividend exercise or something like that. So inputs, you get a sense of the input. So if you're selling out of the money options or you're buying out of the money options, you're like, wow, that thing is decaying $15 a day, right? So if you think about it, if the theta is $15 a day, everything has to go right, and you have to make $15 to break even. So it's important. That's just one example, right? So you have to really have a sense of what the option's going to do. That way, you can help decide if you're going to make any money or not. That's what I would add to this. You got to have what you think your inputs are going to do locked in your head. And then, we have an education from the health people. Just go and execute the trade that will best fit what you want to do, given the underlying conditions that can change all that stuff around. So that would be my answer to go. If you want to approach the Greeks, you got to start with the inputs first, and then you have a shot at understanding what those Greeks are going to tell you.
Great questions. Like I said, we could spend all of the rest of the show on that. Let's move on. That was a dense one. Let's see. Let's do a quick one here after that, just to cleanse the palate. USA Patriots. So he's a very patriotic fellow. Wants to know, what is ADV? What is this mysterious acronym known as ADV? Well, it stands for average daily volume. We talk about it pretty much every time on this show when we do the option block. We run down what these names trade, and it's pretty straightforward. It is just the average amount of options volume that name trades in any given trading session. It's going to spike when we see big action, and then it's going to trail off if it's not doing much. But it's usually a good barometer. You can go pull up. We talk about whenever we do an odd block name, we always talk about what this name averages. Gives you a sense of just how much this thing trades. It's good to know going into that. You can also get that sense from other things. You can look at the bid-ask spread. That's going to tell you pretty quick if it's liquid or not. If it's pretty wide, guess what? Not too liquid. If it's pretty tight, guess what? You're probably in the Qs or Apple or SPY or something else because there's only 20 of them. But that said, yeah, so ADV, average daily volume, pretty straightforward. Good question, Mr. USA Patriot. We got a comment here from Charlie T. I'm not sure why he's writing to us, but hey, I guess. Not really an options guy, he says. I don't need the headache of yet another unknown element, a.k.a. time. It's hard enough just picking my stocks, deciding price points, exit points, etc. Well, there you go, Charlie. He just wanted us to let us know that he listens to our shows apparently, but he's not an options guy. Maybe we'll convert you, Charlie, slowly but surely. If you just like picking your stocks, so if you're doing just picking your stocks, chances are you're probably working limit. Hopefully you're working limit orders in the stocks anyway. You're not just slinging market orders willy-nilly. In which case, you probably could benefit from perhaps selling a put to buy the stock and perhaps selling a call to sell the stock. I'm just going to float that out there, not to offend you, not to push you to the dark side too quickly. But if you're doing that stuff anyway, And we've seen already, flash crash, other things, they have proven demonstrably just working simple limit orders in the stock market is risk. You should be compensated for that. So you know how you do that? You use the options to do that instead. And that's how you go. So let's just try that. I don't know, Mr. Rocklobster, Uncle Mike, anything you want to suggest for Mr. Charlie here, who's not an options guy, but he's listening to us. So I'm thinking he maybe could be convinced.
Trade 1 delta options as a starting point.
1 delta options every quarter, repeat, rinse and repeat.
Also, but 1 delta option means 100 delta option, I think, too, for
yes.
people.
Yes, it does.
But he's just in case everybody's like, then all of a sudden you're going to have a flock of people buying
really,
1 delta options.
Really cheap options. To sling
you
them.
guys are
so
awful.
cheap.
They keep
you guys
going
are the
out
worst.
worthless.
Yeah, that just.
Good point, Mark. Good point, guys.
I like that.
Just because you never know. Everybody's like, Delta 1. They look on their screen like, okay, how do I find a Delta 1 option? They don't go below 5.
That's funny. That's a good question because I always came up kind of doing it the decimal up to 1. That's kind of the way the most pros did it. Hence Delta 1. Retail seems to think 1 through 100. Have you gotten more that way now, Rock Lobster and Uncle Mike? Now that you deal with a lot of retail, have you been lured to that side of the fence?
Yep, 80 Delta, 90 Delta, stuff like that.
Yeah, I have too.
Well, there's no accounting for taste there. All right, but I'll allow it. Yeah, so we'll clarify that. Don't buy just 1 delta. That would not work out well for anyone. Then we definitely would get an email from you. We probably would deserve it. Let's see here. L Penguin. I like this. L Penguin. Oh, good handles this week. L Penguin says, I'm a new options trader and I want to buy a leap call because it looks like the stock is going to go up in the next 12 months. But I don't want to commit to it yet. So he's got commitment issues here, Mr. L. Penguin. I also want to generate income while I hold that position. I think I know where he's going, and I think I'm going to like where he's going. I haven't read it yet, but we'll see. I think I like where he's going. He goes on to write, what are your thoughts on selling the call while he did go there? I love it. What are your thoughts on selling the call while I have the leap? Also, this stock has an attractive dividend that I'd like to capture. Is this even possible? A wrinkle. Interesting. Interested in your thoughts. Thanks. I was thinking about buying a deep in the money call for the leap, and then depending on where the stock is trading at the time, sell closer to the money. Yes, this is great. We love this strategy. It's got many different names. I often refer to it as a synthetic covered call, even though it really isn't that, but it kind of is because you're swapping the underlying out for an option and then selling a closer to the money option against that. Our friends over there at Ally, Brian and his guy, they like to call it a fig leaf. I still don't know really why he likes to call it that, but they call it a fig leaf. He has some reasoning. I forgot what it is. So there's different names for this strategy. Let's just call it a synthetic covered call to make everybody happy. But yes, this is a great. You're going to do this, and we've talked about before. You benefit from the capital efficiency. You're saving a lot of money. Depends on how in the money you go. And people, that's where the flavors come in. Some people like 70 delta leaps. Some people like to go 2 years. Some people like to go 1 year. I think if you stick 1 year, somewhere around 60 to 75 delta, you'll be good. And then you're not selling out too much, but you're getting a nice little meaty option as a result. And then you write, depends on how active you are, 1 month options or maybe even weeklies if you can handle that much action. And then you're going to generate a lot of income while you're doing that. Now, the interesting part about this, the wrinkle, which is fun, is when he asks, can I get the divvy? Can I get he wants to have his cake and eat it too, Mr. Rocklops. This guy is a piggy here. When I heard divvies, I know this is your radar, your antenna go up. You love talking divvies. Explain to our friend, Mr. L. Penguin, why he cannot get the divvy with this strategy and what perhaps he might want to consider doing to get said divvy.
Well, if you own an in-the-money call, you don't get the divvy. That's what you have to give up. So you have less risk, but you can exercise the call and get the dividend, but you're not going to get it just owning the call. If you do sell a call in front and it goes in the money, actually that option could be assigned on you, and then you're going to have to give somebody the divvy. So you have to be careful on how you work that short call versus your leap. Actually, I have a client who does these covered call strategies in spreads, and he does a pretty good job of it. So you have to kind of think of, again, what do you want out of the thing? If you want to hold a call for 12 months and you sell a call against it that's only $1 above where your strike is, I don't know if that's the best 12-month strategy because you're spending a lot of money for 12 months of premium, but you're not also giving the option a chance to make you any money.
So you got
to be careful what you sell.
You can be rolling really quick in that scenario.
You are. You're going to be rolling ultra quick. So you have to think about the option you sell versus what you own. So, maybe that's why they call it a fig leaf, because you're only covering a little bit of something.
He's explained to me why he calls it that before, and it clearly didn't resonate with me. Well, I'll have to ask him again. I'm like, you're asking me again? But I think actually one of the listeners in that show suggested it, and he liked it, so he went with it, but I forgot the reasoning. I like synthetic covered call. Uncle Mike, I know you're a fan of this strategy. Anything you want to add for our friend? And obviously that he's brought up the one kind of downside to this strategy, which is you're not getting the dividend, which if it's a juicy divvy, you could maybe want that. So maybe some thoughts on that along the way, sir.
Yeah, a couple thoughts. First off, my name for it's a diagonal debit spread.
I like synthetic covered call crushes that. What do you think, Mr. Rock Lobster? What's your favorite? What do you call this?
A diagonal debit spread.
Don't say a fig leaf, because I'll hang up on you right now.
The synthetic covered call, I think, is reasonable because it describes what it is, I think.
Yeah, you get a sense of it. But if you want to do your diagonal debit spread, have at it, sir. Go for it.
I'm going to keep them. That's my story. I'm sticking to it. But yeah, the dividend is kind of a blessing and a curse, in my opinion, because of the fact that a dividend makes the call rather inexpensive. The higher the dividend, a lot of times, the less expensive the call is, to where you can have potential for upside on it for a lesser cost. So I think the dividend factor is kind of a blessing and a curse. If you are looking to cash in on the dividend, then like I said, what Andrew had talked about is probably your only choice, that from what I can tell.
Yeah, we've talked before about early exercise, when to capture those divvies and things like that. There's a lot we can go into on that. We won't do that today. But yeah, keep an eye on that put on that strike off across from your call, and when that divvy gets a little more juicy than that put, maybe consider doing some things like that. Depends again how in the money, how far out you go. All these things weigh in. Or maybe you just want to, for that brief period, maybe you want to swap in for some stock. A lot of things you could do if that dividend is really important to you. Also, if it's that important to you, probably want to stay a little bit. You don't want to go 2 years out on that leap, or maybe even not a year. Maybe 6 months is your time frame. Plan it around the divvy, and you shall be good. Great questions, everybody. That already filled an hour. We got through a bunch. We got a comment here from Henry. I'm being notified here. Mr. Schwartz, the flow master in the chat room. I'll wrap up with his comment. He says we use a 22-day option average. We skip X dividend dates too. I guess he's referring to I don't know what this is from, but maybe he's talking about the dividends here with this name for this. But there you go. So yeah, we ran up so many questions. We didn't even get to. I don't know. I guess we got to maybe about a third of your questions. You guys keep sending them in. We love them. We read them all. We try to respond to them all as quickly as possible. A lot of times the good ones filter onto the show. Once in a while, maybe we'll try to do these more just to give you your listener question. Maybe we'll have a whole show just options questions because you guys have so many. But that said, let's bring. We won't even do an around the block because, quite frankly, around the block is just a holiday, so not a lot cooking this week. Instead, that music means, unfortunately, listeners, we're done. Keep those questions coming. Hopefully that will sate you, that will soothe you throughout the long absence of the holiday weekend. But don't worry, you'll get best ofs of this show on Thursday. You'll get best ofs of Vol Views on Friday. You'll get best ofs of Twifo on Friday. So you have stuff hitting your feed to keep the memory alive until we can come back with you 1 week from now. But before we go, let's go back around the horn. Let's start with you. Let's start with Uncle Mike. Why not? Uncle Mike, if over this holiday period, I'm saying to myself, I would A, like to avoid ticket charges, and B, I would like to maybe sling some skew. Where should I go? What should I do?
Oh, call me as soon as you can if such a thing is what you're looking for. If you want an advisor who is not afraid of the word VIX term structure, give me a call, and I'll be more than happy to work with you and help you in any way with which you can with your investing. And I'm at 312-212-3531, or shoot me an email at mtosaw@rcmfs.com. And if you want to learn a little bit more about how you can learn about term structure for yourself, then you need to call Andrew, who can be reached at...
That was your cue, Mr. Rock. Go for it. And
I was searching for that thing so fast.
that mute button is big and red. It's hard to find. I understand. I hear you guys did an easy VIX recently. How did that go? And if people want to check that out, is that still archived on the old optionpit.com for them to check out?
Just go to our blog, optionpit.com, and click the blog button. It's there. We have a great deal for a month of Option Pit Live. You'll try to get our vol newsletter. Also, three more of the Easy VIX classes, or VIX Made Easy. Mark didn't like Easy VIX because it sounded a little slightly, slightly lecherous in these days. So it's VIX Made Easy. Yeah, we had huge attendance. It was great. And we'll be learning you more stuff after the holidays. So if you want to sign up, $17 for a month. And if you don't learn something for $17, I give up.
There you go. See if you can make the Rock Lobster give up. Head on over to optionpit.com. See if you can break him. Tell him I sent you. All right, on behalf of the Rock Lobster and Uncle Mike, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, of course, for sending such great questions. Keep them coming. We do like hearing from you guys on occasion. And, of course, have a great holiday. And we'll see you back here live next Monday for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.